So hello and welcome to Conversations with Esther. Today is 5th of July 2023. Our topic is super exciting. I know you're wondering when I say exciting, whether it's really exciting, but it is exciting to know how to budget. It's a topic that I have gone through with our guest a number of times, and I will never have enough of it. I think it's something we learn every other day. So I'll just say a short prayer, then we can kick off. Father, in the name of Jesus, we thank you for this session. Thank you for the attendees, and thank you for our guests this day. We pray that God, as we continue with this meeting, you will be with us, and that the wisdom we get from this session will help us and transform our lives and those around us. We thank you. In Jesus' name we pray. Amen. So today we embark on a topic that is hot in Kenya, especially now that everyone is crying out. David Tanki, everyone is saying, my money is not enough. My money is not enough. So maybe David will tell us how we can make our money enough. I'm not sure, but we will get into that. Allow me to straight away introduce Tanki. David Tanki is a founder and CEO of Lanex Africa Limited, which provides support to SMEs and corporate organizations. For his handled clients like KCB, Absa Bank, Coca-Cola, Butter Shoe Company, James Finley, etc., to succeed through strategy formulation, revenue improvement, business restructuring, human capital development, and financial management. He has over 20 years of experience, 15 of which is tied to personal finance and investment management. David holds an MBA in finance, and he is specialized in investment and portfolio management. Welcome, karibu sana Tanki. Tanki, I know David also sits in the Kenya Tourism Board, and he also heads a section of CITAM. I know some of you are from CITAM. You know Tanki. Some of you told me, I know Tanki, he's in our church. So karibu sana David Tanki. I don't want to take a lot of time. You can unmute and take us through personal budgeting, personal finance. Welcome, Tanki. And Tanki has been a very good friend of mine. Let me say this, David. For years, back in school, at least for some evidence, we are in a fellowship together with David. So karibu, David, the floor is yours.
Yeah, thank you so much, Esther. And possibly you can enable me to share my screen, if you don't mind. Can you hear me?
Yes, done. Just confirm you can.
Okay, thank you so much. Beautiful. All right. So let me share my screen. I hope everybody can see my screen.
Yes, I can. I can see it from my end.
Please confirm that, Esther, before.
Yes.
All right. Good evening, everyone. This is DM Tanki, and I'm very thrilled to be here together with Esther on this conversation with Esther today. And I'm looking at personal budgeting. This is part of what excites me personally. I know Esther is excited as well. And I want to just get in because Esther has already introduced what I do and some of the things that I do out there in the market. I know we are in 2023, but for a moment, let's go to 2030. It's only 7 years away from in your thinking and imagination, we are already in 2030. How will your family do at a personal level look like? I have only about 30 minutes, so I don't want to. The year is 2030. It's 7 years away, and you need to be able to visualize and see. Because this guy called Steve Covey said the only way to be very certain about the future is if you are participating or helping to create it. And we want to see what happens now. What will you have achieved with all the assumptions you can imagine or make by the year 2030, 7 years away from now? Fact number one, more than 70% of the population may not actualize what they imagine to look like by 2030. This is very sad. And I'm telling you guys, this is sad because it is the reality. You know, today is 2023, but 7 years ago was in 2016. Okay. And if you can look at your life in 2016 and see how much has changed now, then you will discover that, and for my sake, every time I talk about finance, I dwell much on cash flow. I'm not asking how much pieces or shambas you have bought. No, I'm not asking how much real estate houses you have acquired. No, it's cash flow. Okay, how much cash flow are you attracting beyond your salary? Number two, 15% only will achieve, even exceed their 2030 imagination, unless you take action and give all the seriousness it is how you run your life in the year 2030. Then you must take charge. You must be in control yourself, not anybody else. Life being dodgy, and I assure you, life is very dodgy. With all the assumptions you can make, with all the intrigues you can have, life is very dodgy. Some people, if not careful, will be thrown out by the life system itself. So there is a lot that we can talk about, but allow me to get into the discussion of the day. What then determines financial success? What are the drivers? What do you need to watch out for? What do you need to do? This is very important. Begin by letting us know that you have an economic engagement as a person. This is what I believe, that you are currently doing something, that you have an income. It's an assumption I'm making, because we must do everything based on assumptions. So the assumption I'm making is that you have an economic engagement, and that you have a family, and you earn something out of it. Okay, as a person or as a family, and you earn something out of it. I'm saying as a person or as a family because some people are single. That is still okay. Some people are married. It's still okay. You may be a single parent. It is still okay. The fact is, you need to be able to run your life in the manner that is needed. Now, most expenditure plans look like this. They are miscellaneous goods, maybe some percentage, food and non-alcoholic beverages, taking a good chunk of it, alcoholic beverages and tobacco. For some people who take alcohol and cigarettes, it's quite substantive. Clothing and footwear, around 3.5%. Then housing, water, electricity, gas, and other fuels, 23.9%. That's about 24%. It's one of the leading in terms of household expenditure. Then we have furnishings, household equipment, and routine household maintenance, about 4%. Health, 1.6%. The assumption is that you are healthy most of the time, unless you have some young babies that occasionally will have problems. We are not looking at parents at this stage, but yes, even parents can be part of the problem that you are looking at and which you need to plan for. We are looking at transport at around 15%, communication around 5%, recreational services and culture around 5%, education. A lot of people may not be doing a lot in terms of their personal, but for children, yes, they may be pumping in quite a bit. And then restaurant and hotel, look at that, a whole 13%. We spend a lot of our money in coffee shops and in joints that possibly we can be able to avoid. Okay, that's just a nutshell. By the way, this is out of research. Now, but you have growing series of needs. This is the other assumption I have. You have growing series of needs and wants that you wish to gratify along the way, and which requires you to have continuous access to a good amount of money. All right. Now, but your money is quickly eroded month on month, if you care to know, and your encouragement and income continues to faithfully come every month. Now, the unfortunate part is that, yes, your needs and wants are growing, but the income is stuck there. Especially when we talk about the world today, Kenya today, a lot of things have gone up and the income hasn't changed as much. But you thank God that at least it is still there, because you also never know how long it will continue to be there. So you are, however, left to the mercy of your employer. A lot of us are left to the mercy of the employer, and they hope that nothing will happen to you or your income in the foreseeable future, except for retirement, when you hope that pension will be in a position to satisfy your needs at the time. So there are things that are happening to us, but we run our life based on a lot of assumptions, and we just want to see how some of these assumptions will be able to help us or not help us. So in the next few minutes, maybe about 15 or so minutes, I want to be able to see what you need to do, because time is running out. What do you need to do? What can you fix? How should you manage yourself so that at the end of the day, you still be in a good and a better financial shape? Okay. So there are a couple of things you need to do. Let's look at them. And I've summarized because, in 20, 30 minutes, there's nothing much you can be able to underscore. But I want you to still be able to say, in these conversations with Esther today on the 5th of July, the year of our Lord 2023, I have picked something. And here is the first step. You need to take charge and control of your money, of the money you earn. You need to be able to take charge. What do I mean by this? A lot of people earn money, but they are not in full control. Other people, other situations, other circumstances, other issues of life control their money more than them. So you need to take charge and control of your money. You need to be the one telling the money where it needs to go. Now, let's look at this. For example, your gross salary is 100,000. I know I just picked a number for the sake of calculations. You can append your figure there. Statutory deductions, 30%. All of a sudden, 30,000 has gone. You have a net of 70 already. Then tithe. There are 3 governments that you need to pay. The first one doesn't even consult you. The government of Dr. William Ruto will just pick the 30% without consulting you. Then the second 2 governments, number one, God also collects 10,000. And because he doesn't, a lot of times, because God doesn't really interfere much with you, some people, it is actually said in Kenya, about 20% of churchgoers tithe, 20%. The others are robbers. And some of the robbers are listening to me today. Now, and then the next one is your personal savings. Now, this is controversial. I put it at 20%. I go to church, as Esther said, and I use biblical principles to determine the arguments that I have. So why 20%? It is a wisdom that Joseph gave Pharaoh. He told him that if you want to succeed, because 40 years will always be followed by lean years, then 1/5 of all the produce of Egypt must be saved, so that, in due time, you will be able to have enough to be able to take care of the whole of Egypt. So 1/5 of all the produce of you must be saved, 1/5, and 1/5 is 20%. So that is a biblical percentage. But I also realized that in Singapore, they kept it at 22%. And in Singapore, they made it illegal. It's a police case if you don't save 22%. In Kenya, there is no such law. Everybody can eat all their money and it is okay. But 20%, if you are a wealth seeker, should be able to go there. That becomes 30,000. And that 20% is what you use to build investments. Very important. So your real disposable income, ladies and gentlemen, is about 40%. Okay, tracking from the, because 30% government has gone with it, 10% has gone to God, 20% has gone to you. So that is a total of 60%, which has just gone. So 40% remains to take care of all the other things. And you still need, balance to savings. or surplus and deficit, you still need to punch in something so that at least something remains, even though you have already saved your 20% to be used for your investments. All right. Now, so areas where you can make gains, as I said, housing and accommodation. You don't have to live in the neighborhood where you live. You don't in the kind of a house that you live in. Food and groceries. If we have time, I can be able to tell you how you can be able to make gains just by modifying the kind of food and the groceries you buy and where you buy them. Transport and entertainment, the same thing. You can be able to save quite a bit from there. Grooming and accessories, 100%. You can save so much there. Societal demands, where we normally talk about the black tax. In this country, black tax is even huge. Black tax is where people put you on WhatsApp group and you feel you are under obligation to contribute just because someone is your friend and they have lost a relative, or they are sick, or they are getting married, or they are going abroad. You know, we have all manner of WhatsApp groups that people create and they put us in, and we feel we must be part of it, or churches are being built, or equipment in churches are being bought, or something, whatever it is. This black tax is very expensive. And I propose that you need to be able to look at your expenditure line items and see where you can be able to make gains as you take charge and control of the money you earn, so that you can, the bigger thing, my interest, ladies and gentlemen, I'm looking for the cursor. My interest is in this 20%, your personal saving, because this is, your wealth is not informed by this 100,000. No, what you earn is not what makes you wealthy. What makes you wealthy is the percentage, the proportion of what remains, which is 20%. This is what will make you wealthy. So when we are talking about wealth, we are talking about the portion, the proportion of your income that you pump into savings, then you can use it to build investments. That is what matters. And that is what you need to be able to plan around. Number two, and maybe before going to number two, you need to manage other things like consumer spending. I'm just talking about things that can be able to help you show off spending, things that you buy so that friends can see you are doing so well. Wasteful spending, buying things that you don't even need yourself. A lot of merrymaking, a lot of, you know, unnecessary trips and all that kind of stuff. Now, so forget about all that. I've said, number one, take charge and control of your money. You need to be able to explore and see where can you save so that you have more money remaining to build investment, because that is the whole concept. The reason you budget is so that more money remains. Period. The reason you budget, the reason you create a spending plan is so that more money remains. All right. Now, not having clarity of a compelling purpose in this, have an agenda with your life. What is your life purpose? What do you want and by when? You know, in the year 2010, my wife and I developed what we refer to as our life plan 2020. It was a 10-year plan in the year 2010. And surprisingly, just because of having this clarity of direction, clarity of where we were headed to, it really made a big difference to us. And now I believe 100% that you need to have an agenda with your life. You need to know where you are generally going. Set goals, because when you are doing budget, you must be doing it around a particular goal that you want to achieve. Okay, you have a mission, get to know what on earth you are here for. In fact, the book by Rick Warren, The Purpose Driven Life, is an amazing book. It's a small book, you can read it in 2 days. The Purpose Driven Life, advocating that you get to know what on earth you're here for. Break your goals into manageable yearly and quarterly objectives. And listen, friends, and because it is a budget, it is a spending plan, you can be able to evaluate it every end of 3 months. That is what corporates do. That is what KCB does. That is what Safaricom does. That is what Coca-Cola does. That is what everybody else who is succeeding is doing. Break your goals into manageable yearly and quarterly objectives. And more importantly, evaluating and determining how far you've gone in that quarterly or yearly goals, and then have a system of accountability. Glad that you are here today with conversations with Esther, and I'm sure you can even have Esther as your accountability partner. Why not? You have joined her program, and you can be able to tell her, look, Esther, I just want to bounce it on you, just to make sure that someone is overseeing. By the way, it is something that we did again with the help of someone who told us. He came and told me, David, I want you to do your plan, your annual plan, and put it in an envelope. So I wrote it down, I put it in an envelope, and then he told me, David, surrender the envelope to me. We surrendered the envelope to him. Guess what? We went for 1 year. We met after 1 year. I even forgot that I had a plan. I forgot I had goals. I forgot we had developed a plan. I forgot everything. Okay, everything I forgot. But 1 year down the line, he called me and said, David, can we meet? Yes, we met because he was a very senior fellow. He's still a very senior fellow, a man that I really treasure and respect. So when he calls, I must be available. And then he asked me, David, how far are you with your plans? I said, which plans? I had forgotten everything. But I had written it down and put it in an envelope and gave the envelope to him. So he opened the envelope and now he read to me, and it was very sad that I had written it down, but I never followed. I never accomplished it. I never did anything. So now I discovered if you must succeed, you must have measures of ways and means of evaluating. Just the way companies do. Every quarter, do it. Okay? And then plan, of course, and agree on how to monitor your plan so that it can be able to help you. Now, your financial position may keep changing. You want the stability of what will make it sound for you, so that your family doesn't suffer with the ups and downs of life. Okay, you have skills that you currently have that you can monetize. It can help you determine earnings. Although in the Kenya of now, if sometimes you have skills and those skills are not even helping you, a lot of creativity is needed, a lot of knowledge is needed, and all that. Now, there are several opportunities you can work on. Take advantage. Okay, in your journey to 2030, I told you to assume that you are sitting on 2030, which is 7 years to go, and then develop a plan around 7 years, do a budget around 7 years, and you will be very mesmerized in terms of where it will be able to take you. And I challenge you, you can actually join me. I can also become part of your accountability partners. The relationships needed to make success the reality. You need certain relationships. You need certain accountability measures and structures. Okay, you need a support system. Maybe your family. You need people around you that can be able to help you. Friends that you can count on, relatives you can always fall back to. Life is very interesting. You need people, you need family, you need friends, you need relatives, you need people who can be a success, and you will be able to score wherever you are going. Now, step number 3. So step number 1, I said you need to take charge and control of the money you earn. You need to be in charge. You need to be able to know what is it that you are doing, what are you spending the money on, what is the reason you are spending that money on that, and why will you want to use the money in the manner you use. So take charge of the money. Step number 2, I said you need to be able to have an agenda with yourself, an agenda for you, an agenda with your life. And you need to be able to have goals. You need to be able to have a purpose. You need to be able to develop yearly goals, which you can break down to quarterly. And now that I even suggest that we do a 7-year one. By the way, I propose a 7-year one. Then it means that you need to be able to know what will you do in year 1, in year 2, in year 3, in year 4. Trust you me, it sounds complicated. It looks tough. My family and I did it for 10 years in the year 2010. So it's not even a 7-year thing. We ourselves, we do it in cycles of 10 years because we believe that 10 years are good enough. Okay, so you are basically growing 2 areas. Listen, 2 areas. Okay, monthly earnings where possible, and you need to make it possible as much as possible. You need to have monthly earnings. And when I talk about monthly earnings, is basically to say, just be economically engaged and earn something. Don't say you have no job or you have whatever. No. And if you're married, make sure your spouse is earning something. And don't put pressure on the spouse. No, don't put pressure. Just discuss calmly, sweetly, in a nice way, in a very simplistic way, so that there is no much pressure on the side of the spouse. And if the spouse is a man, they don't like being asked questions when they have no money. You don't go reminding men that you should have bought chicken or those funny things that a lot of times happens in families. Be wise, so that you can travel the journey. Then number two, earnings from your previous earnings. Now, number two is my focus, friends. So if there is anything that these conversations with Esther, you need to be able to go home with is, yes, you're earning, you are on salary. I appreciate. You earn good money. I appreciate whatever the money is. You have a salary month on month. That is good. I am happy with you. My business is to find out from you whether you are earning from your previous earnings. Is your money working for you? That is the bottom line. All right. And why? Because by the age of 45, okay, I normally modified for people so that they don't feel so worked up. Between 45 and 50, you need to have transitioned to be earning more money from investments than from salary. Okay. Did you hear me? I said by the time you are getting to between 45 and 50, you need to be transitioning, earning more money from investments than from salary. So number two is critical. Earning from your previous earnings is very important, and you need to be able to sweat your assets, sweat your cash, so that your money is helping you. Look for investments that resonates with your risk level. As I said, I'm even actually on borrowed time now. Maybe I can do another 5 minutes. Look for investments that resonates with your risk level. Pursue moderate returns. Don't be greedy. 12% is good. 13, 14, 15% is good. Don't be greedy. It is biblical that the money that grows little by little is what makes you wealthy. Don't be greedy. Don't look for 50%. I will double it 100%, my friend. You utapoteza everything within no time. Seek knowledge in the area you are investing in, and that will be able to help you. All right. Now, mystery of building wealth, there's a lot that we can talk about, deciding what it is that, or how it is that you want to build wealth, determining what vehicles to use, creating a personal wealth plan, working on your stick-to-itiveness to the plan, because a lot of people plan and they drop it along the way. They come up with good ideas, they drop it along the way. So you need to be able to know and master all these things, and allow me to just move out of that, so that I can tell you attributes of good investments. Okay, good investment is one that is liquid. It is putting money into your pocket, into your bank account. That is a good investment. Even if it is not putting now, but it has potential to do it tomorrow, and that tomorrow should be near. No management headaches. If you are employed, for example, you don't have a lot of times to run up and about. And if you are employed, be very careful what investments you get into. Atikwenda kuanzisha biashara. Those are money-losing investments. You are employed na unaenda kuanza biashara which requires a lot of management time, and you have no time, unaenda unapoteza bure. Then stable growth rates. This is one of the things that you are looking at, stable growth rates. You are looking at investments that are easily leveraged. Good investments, like for example, if you are doing shares or doing stocks, or doing all manner of paper investments, they can be good because they are all easily leveraged. Even real estate itself is also easily leveraged, but it is not very liquid. Easily portable. Interesting. Now, when you talk to Kenyans, when you tell Kenyans about this portability of investments, because Kenyans want to buy land. You know, in Kenya, if you have no land, you are not man enough or woman enough. But a good investment is one that is easily portable. An investment you can put in the briefcase and go to the US and you are good. That's a better investment. You know, you can have land and you try to sell it for many years and nobody wants to buy it and you suffer with the land. I'm not saying you don't buy land. Personally, I've bought land, so land is good. You need to be able to balance it so that all your investments are not in one place and then you suffer with that one place should something happen. Generates steady cash flow. Very important. They have stable growth rates and they are generating for you steady cash flow. That is very important. So, ladies and gentlemen, allow me to just leave it at this. If you were to look at just a summary of investments, because there is, why are you budgeting? You are budgeting so that you can grow your money. Government securities, the risk level are low. Investment horizon is short to medium term. Your investment motivation is capital preservation. If you look at quoted equities or securities, risk level is high, medium to long term, purpose is building wealth. Unquoted equities, you can also get into unquoted equities, risk level is high, investment horizon not very determined, and investment motivation is diverse depending on the investor. Money markets, very low, generally for short term and for capital preservation. Alternative markets like digital currencies, risk level is very high, short to medium term, aggressive risky way to building wealth. Commodities, medium, short term, building capital is critical there. Minerals, medium to long term, that is the investment horizon. Because you need to be able to know what is the investment option I am going for, what is the risk, the level of risk level that investment has in comparison to your risk appetite, your personal risk appetite. And then investment horizon, for how long will you want to be there? And then investment motivation, what is it that you are looking out for? And then, of course, you can be able to determine what it is that you want and how you want it.
David?
Yeah, I want to stop there. Thank you so much.
No, I don't want you to stop. I had sent you a message to continue. I know there's people are really digesting. Just continue to the end. Let's go up to 5 minutes to 8. That's fine. Just continue.
Okay, so I just to summarize what I was saying, thanks, Esther. You need to know what investments are you pursuing as a person or as a family, and the risk level of those investments. That's what I said. Why are you talking about the risk level of the investments? Everybody has their level of risk appetite. My risk appetite is different from Esther's risk appetite. So we all have different risk levels or risk appetites, and therefore you pursue one according to your risk appetite. And then you need to know, why are you getting in? What is investment motivation? And for how long do you want to be there? All those are variables that determines what to get into and what not to get into. And follow your lane. Listen, friends, we are talking about personal budgeting. Personal, it is so personal. Don't follow mine, don't follow Esther's, follow yours. Everybody should follow their lane. Trust you me, if you follow your lane, you will arrive alive and you will arrive comfortable. If you follow somebody else, if you change lanes, you will be disqualified generally and you will suffer. Now, and because of all this, normally when we talk to different participants, now we are many of us in this call today. There are very many others on YouTube and many others on other social media handles like Facebook, maybe. So there are people that are young, others are middle-aged, and their motivation is very different. For example, when you are between 23 and 30, your level of risk appetite should be a bit high, but your average monthly savings should also be high because you don't have a lot of responsibilities and a lot of obligations, so to say. When you go to block number 5, between the age of 30 and 38, your money has grown. Hopefully you earn a lot more money, but your average monthly saving also drops to 25. Why? Because obligations have increased. You have more people that you're taking care of. When you go to between 39 and 46, your money has grown, maybe 250,000 on average, just maybe example. And now your saving has dropped also to 20%, bigger responsibilities. Your investment objective is asset growth. And then when you go to 47 to 54, now your risk appetite drops to low, because as you become older towards retirement, you don't want to be in debt and having a lot of liabilities. And you also do 20%, and see what happens when you get into retirement. It goes back to 30% savings. Why? Because most of the time your children have completed school, you don't have a lot of obligations, and you can be able to save more because you also need a lot of money in cash. When you become older, you need more money in cash and that kind of stuff. By the time you are getting to block 9, between 63 and 70 years, you don't have salary, okay? Neither do you have savings, but you have investment income that is great, 7.2 million, and it could even be greater than this depending on what you did. And your motivation is asset stabilization and all that. So what is critical here, friends, what is critical is that if we were to look at this table in view of what we need to do, and I don't have a lot of time to discuss this table, it basically shows if you were to plan your life around 7 years or around 10 years, what exactly will be happening? How will your money be growing? Where will your money needs to grow? Because when we talk about a budget, we are talking about not just the spending part of it, we are also talking about this investment part of it. The capital structure. If we were to look at corporate finance, we are looking at the capital structure, and we are saying that this is where I need to put my money, and this is how I want to grow my asset base. This is where I want to grow my investment and that kind of stuff. There are three things that you need to worry yourself about. Number one is the discipline to consistently save every month. And you need smart ways of managing expenses. Smart ways of managing expenses. And then number two, the commitment to invest at least 30% of the savings. I brought this up because I realized a lot of people save only to go back and eat the savings. Savings are for investments. You want your money to work for you. Savings are for investment. The reason you do a personal spending plan or a personal budget is so that you can have more money pumped into investments, not necessarily just saving it for a rainy day, as people say, ama sijui ukikanyanga mayai ya mtu. No, we are not stepping on anybody's eggs. We are careful. We won't do that. Most people save only to consume after a while, and we want you to be protected from that. And then number three, the passion to look for a 12% minimum rate of return. I say between 12 and 20% is good. Don't be greedy. I have said before, don't go for exorbitant rates. I have told you before, because those are opportunities for losing money, and those are opportunities for increasing your blood pressure. You don't want to be sick or sickly when your money is supposed to be increasing. So your money is increasing, but you are sickly. You are spending more time in hospital than enjoying your money. Okay. Allow me to stop there for now. And then should you have anything that you want to know, yes, this is Conversations with Esther. You can be able to engage with her. She can also just get through to me. But yeah, maybe we have a few questions now. Esther, we can leave it at that so that we can do a few questions here and there. Back to you.
Thank you, David. I know they want you to continue. I'm seeing a lot of conversations on the site. Can we get this? We will upload this on our YouTube, Conversations with Esther Katiba, tonight. We'll make sure we upload that. You can post your questions. Alex, are you speaking?
No, sorry, Kazadi. Go on.
Okay. So any questions on the site? I think, David, honestly, I'm getting chats from people. We need to have this as a longer conversation. I think we'll plan for a session for 3 hours. Then you can take us through that maybe on a Saturday morning for 3 straight hours. So that we give people enough time to ask the questions and we get to engage you more. Anyone with a question? I see, can we get the pre-savings there? David, every time you train this, I feel guilty, you know?
There is now no condemnation.
I feel so guilty when you say that you save for investments, you don't save and then go eat. I know we are many here. We are many guilty people that save money and then go and use it. Anyone with a comment? I saw Simba here. Simba, are you there? Esther, this is wonderful on my pen. Money management. Yeah, Simba. Budget, I'm learning. Good, good. So any questions? I'm waiting for questions on the side. But I see people have learned, but that was a marathon. David, I know that takes quite a long time. We've had that session before. It takes a long time. Maybe if the people in this call would agree, we could set 3 hours and go through it, break that down, be able to budget. I looked at it and I saw the only remaining one is 40. David, it's not even 40 now. I think it's 35. The tax is going up to 35. So it takes another 5 from the 40 you were telling us, right?
No, if your money is more than that, if your money is more than 500,000.
Don't assume.
No, according to the finance bill.
Yes.
The 35% kicks in when you
After
earn 500,000 and above. Yes.
Yeah. So members, I think that is, I don't see any questions. So do I assume that, okay, I see a new message there. Where place can you invest for more benefits? Or where can you invest for more benefits? Just answer that one, David. Thank you there. David, you're on mute.
Yes, sorry.
Yes, someone asked where you can invest for more benefits. Maybe you could answer that.
Yeah, like I said, sometimes when you talk to people, they want you to give them blanket investment vehicles or instruments. We are of the opinion that investments must be products of individual analysis. We need to know what is the motivation of the person. Why are you investing? What is your risk appetite? What is your age? Sometimes somebody says, I have money for the next 1 year. And then after 1 year, this is what I want to do the money. This is how I want to use the money. So the investment motivation, you know, Esther, part of the reason why we suffer many times is because we think that if you have 1 million, just throw it somewhere, put it in Nairobi Stock Exchange or buy a bond or go buy some parcel of land or put it in digital instruments. It doesn't work like that. It's a science. There is a lot that needs to happen before throwing money into something. And I want to advise that person, you must learn more and interrogate yourself more and get to know what is your mission. Why are you doing it? What is the purpose? Are you doing it for school fees? Are you doing it for the future legacy of your family? Are you doing it for cash flow? Are you doing it because you have money that you have gotten and you don't want to lose it, or you are considering buying land for your family after some times, or a house? So the motivation. Otherwise, everybody knows where they can take their money. Everybody knows, even the one who is asking. They have an idea what they want to do with the money because it is common knowledge. The trouble is that we don't know how to tie it with our life purpose, with our mission. You are mute, Esther.
Sorry. I'm seeing someone say here, elaborate again on risk appetite. Another one, with the current economy, which way should we go for investment? This risk appetite, David, tell us more.
So everybody has a level of risk they can tolerate. There are people whose risk appetite is very high. Their adrenaline kicks in and they get excited about it when they are investing in things that they don't even understand. Okay, or things that they are hoping that will generate for them a lot of money and they don't understand it much, but they still feel they want to get into it because they are risk takers. their appetite for risk is very high. But there are people who are very cautious. If they don't understand, they will not jump in. If they are not sure, they will not jump in. So the level of risk appetite is very low, and they want more information, they want more analysis, they want more knowledge, they want a lot of things before they can say, yes, I'm comfortable to put my money in here. Now, then there are people who are risk neutral. They are indifferent. They are neither high nor low. But the worst part with those kind of people is that they follow. They sometimes they become emotional investors when they go into forums and they hear everybody's going to bitcoins. They all also run into bitcoins. If tomorrow they hear people have left bitcoins and they have gone for Ethereum, then they also run there. Then tomorrow, day after tomorrow, they hear quails have come, or mushrooms, or rabbits. They also run into rabbits or mushrooms. So it is imperative that every family, every individual gets to know themselves very well, their investment motivation, what are they up to, what makes the most sense depending on their risk levels. Why are we doing this? Because the greatest investment, ladies and gentlemen, is your health. The greatest investment is your health. You want to be healthy even as you make money. Don't seek money so much to a level where you destroy your health, and as your money is growing, you are spending your time more in hospitals than in places where you ought to be enjoying the money. So that's why it is important to align your mission, your purpose, your risk appetite, the kind of investment that you're pursuing, the level of returns that you are seeking, with the kind of cash flow that you also want. All these things must be aligned so that when the money is coming, you are also there and you are strong. You don't want your money to come when you are sick, and neither will you want to be spending a lot of your money on hospitalization or hospital bills just because you neglected a thing or two. That's all issues about risks and risk appetites and risk management.
So I see something else here. Someone says, Esther, not that people don't have questions. I think they're in shock, just like me. This is a wake-up call. What would be safe investments for one in their 50s?
Now, so according to, Moses made a prayer in Psalms 90, verse number 12, that God helps him to number his days right, or to basically understand the calendar of his life. So when you are in your 50s, the hope is that you already made investments and that your mission in your 50s is investment protection. You have already analyzed in your 40s that these are the kind of investments that are stable and they're giving you good returns. And therefore, in your 50s, you are consolidating what you have already invested in so that it can be able to generate more wealth for you, even as you begin now helping your children to understand how to manage, because you don't want to retire and then seek to bring your children when you are retiring. Now, but suppose you didn't do that. Suppose you didn't invest because of one reason or the other, and you didn't, or you have not pumped in much into assets for whatever reason. What do? They say the best time for doing anything was 20 years ago. The next best time is today. You need to be able to now look at you, because you are almost trading with the last bullet. In your 50s, you are holding almost the last bullet, where you cannot afford to make mistakes. And because you cannot afford to make mistakes in your 50s, you go for moderate returns. Don't go for exorbitant returns. You go for moderate returns that are guaranteed, because you cannot afford to make mistakes when you get to 50s. So you look for instruments that are secure, instruments that are guaranteed, instruments that are proven. Okay. For example, if you had 10 million to invest, don't go investing in some business you don't know. You are safer putting the 10 million into a bond, because a bond is guaranteed, a bond is secure, a bond is proven. So go for instruments that are secure in your 50s. That's what I can tell that person. But otherwise, through conversations with Esther again, you can be able to reach, and we can have a more personalized, detailed conversation so that we can help you more. Thank you, Esther.
Wow, Esther, maybe a quick one. Shylock things, how do we go about them? How can you deter yourself from such? And what about investing on a loan? You can take a loan to invest with high interest rates like Mogo, this microfinance that gives out cars. What is your take?
So Shylocks are a no-go zone for anyone who is a wealth seeker. But if you are a poverty seeker, you can go for Shylocks. You know, a Shylock charges 10% on average per month, which translates to 120% per year. At 16% from banks, we are already complaining that the rate is too high. But somebody is going for 120%. That is total insanity. It is very unfortunate that some people may have gone there. You don't go there. Now, even microfinance, you need to be very careful which one you are going for. There are microfinance that do 7% per month, which translates to 84% per year. Is that a good percentage? No. Why would you want to go there? There are others that do, actually on average in Kenya, most a good number, there are those that do 7, but there are others that do, most of them do 3%, and 3% translates to about 36%. It is like borrowing from credit card and not paying. Okay, a credit card is good because you borrow from it, and it can actually be 0% if you pay everything at the end of the month, but it could be 42% if you don't pay for it. So my take is, you need to be very careful where you borrow money. And my advice is that, by the way, if you don't borrow, you won't die. You will be very inconvenienced. Sometimes you will actually suffer, but it is not the kind of suffering unto death. You won't suffer until you shed blood. No, just agree with you that you can't go to a Shylock. You better talk to friends to help you. Now, the other comment was, can you invest? Can you borrow and then invest? Yes, you can. If, for example, you are borrowing at 12% because it is from a SACCO, and the way you are investing is at 15%, there is a margin of 3%, which makes a lot of sense. There are times that you borrow 12%, again, maybe it is from a SACCO, and you are using it to buy land, and you don't have, the land is not productive now, so that it helps you to pay the loan. That's still okay. So you are saying you will tighten your belt, you will agree to suffer now, you will agree to use your other income to finance the repayment of that loan, because the realization or the generation of cash flow from that asset will be realized in future. That still is okay. So I recommend. But if it is, don't borrow from Shylock and agree with you that you are going to invest. Forget. That will be stupidity. Don't borrow 7% at 84% per year, and you are saying you are going to invest. No, there's no way you'll be able to do that. There's no way you'll be able to succeed with that. You will suffer with that kind of investment.
Hey, David, I am here receiving the message in shock. Well, someone says I'm earning a small amount, but I spend a lot. What should I do to have a discipline for a small amount that I have? The next one is perhaps managing debts. What's the best way? I think in managing debts. I think you can pick the 3 at the same time. I know we are running out of time. There's that one for small amount. There's another one for managing debts. There's the other one for, is investing in SACCO share contribution part of a good investment?
So you are earning a small amount and spending more. The scripture says, put a knife to your throat if you are given to greed or gluttony. You put a knife to your throat. Why would you want to spend money you have not earned? You need to be able to tame yourself and condition yourself to be able to spend money only that you have been able to earn. And if you can't increase your earning, look for ways of increasing your earning so that it can be able to help you. Otherwise, it will be very difficult for you. You are generally a poverty seeker. Life will be very difficult ahead of you. If you don't change now, you perish. And I apologize for using a strong word, but there is no other way to tell you that if you don't change, you actually suffer, and suffering is imminent, suffering is guaranteed, and you don't want to suffer. Certainly not after entering into conversations with Esther. You don't want to suffer, and we wish you the best. We pray for you. We ask that God may give you wisdom to support you. Now, the one on a SACCO, SACCOs are good. By the way, if you look at dividend earnings from SACCOs, there are others that are as high, very high, even to 50%. But it is because shares are also very limited. Most of the time, it is maximum of 25,000. In most SACCOs, others are even 10,000. And on deposits, you find on average about 10 to 12%, which is okay. So a SACCO is good because on deposits, you are able to earn about 12%, 10% on average. I don't know which SACCO you are and what it is giving, but most of them between 12 and 15%, between 10 and 15%, sorry, with a number of them being at 12, a few of them being at, a number of them being at 10, a few of them being at 12, and limited number being at 15. Now, but the beauty of a SACCO is that you can also borrow against it. So a SACCO all the time is a good place to put your money. And the third one, Esther, was what? I forgot the last one.
No,
Or debt management.
Yeah,
debt management.
Yes.
Yeah, debt management. Debts are a bother. Debts are a pain. Debts bother people. You know, they don't give you peace. In fact, when you are in debt, every time as somebody calls you, you will want to switch off the phone because of the level of disturbance that it is likely to create. So it is important to look at how to finish the debts, how to manage the debts, and how to ensure that debts are being paid. Dawa ya deni tuliambiwa na Waswahili ni kulipa. Just find ways of paying, and you will want to pay the ones that are most expensive, or the smaller ones that are very irritating. Sometimes the smaller debts also can be very irritating. Mtu anakusumbua sana kwa sababu alikupea 10,000. You may want to find a way of just paying it off for the sake of peace, because peace is everything. So that's what I can say about that, Esther.
No, I know we will not finish this, but I'll just run through the others. And members, we've shared a link. There's a link we've shared, a WhatsApp link. You can join that link. We will organize another training and a detailed training. So just check through the chats. There's a link you can join. Someone says, I am already in block 6 and things don't add up. How do I start saving?
Yeah, as I said, because we may not be able to finish this conversation, if anybody has any comment, maybe they can take your email and then they can write to you, Esther. You can forward it to me. And then we can pick it up and see how we can be able to assist them.
Yeah, and I think that's what I'm saying. We've actually created a group because it seems this is a topic that needs quite a lot of time. We've created a group. The link is there, and I can see quite a number of you have joined already, so that we'll be able to organize another session with David. But thank you. Borrowing in a SACCO, in a bank, which one is better? Talk a little on money market. We'll do the money market during the 3-hour session or so. And even if it takes a whole day training, I think, David, we will look for you. Yeah, we can't, honestly, we can't be able to answer all this. But follow us, go to our YouTube link. We will upload this on our YouTube link. It's there. Conversations with Esther Katiba. That's our YouTube link. It's been shared right there. So just subscribe. All our recordings are there. Please join the WhatsApp group that we have formed for this purpose, so that we'll have this conversation. It's already 8:03, but David, thank you. Someone was chatting me and saying, why is David doing this to me? You know, so someone is in their house and they're saying, you're getting into their homes and they're listening to this conversation with their spouses. It's not, but it helps anyway. It helps. And thank you, David. Thank you, everyone. And let's keep in touch in the group. I hope you have joined before we can switch this off. Let me just check in a minute because I see quite a number. Please join. Yeah, I see people are still joining. Asante sana, David. You have a lot to share, and I know this takes a long, long time. Very informative, very good discussion. You will get it on the YouTube. So in a few, maybe in 2-3 hours, we'll have uploaded that. So go to our YouTube and you can listen to that and send it to your loved ones. But thank you, David. I know we pulled you out of a very crucial meeting, but asante sana, and thank you everybody for joining Conversations with Esther. We meet here again next week on Wednesday for Fireside Chats. Thank you very much and enjoy your evening. God bless you. Bye-bye.